Hello and welcome. Today, we are tackling one of the most critical technical areas for international accountants, the comparison between US GAAP and IFRS for property, plant, and equipment. I am Suresh Periyasamy. As a chartered accountant licensed in the US, Canada, and Sri Lanka, I have navigated these differences for years. While the definitions of an asset are similar, the measurement rules, specifically how we value assets after purchase, are two very different languages. By the end of this video, you will be fluent in both. Let's start with the underlying philosophy. US GAAP, found in ASC 360, focuses on historical reliability. It is conservative. It hates volatility. Its goal is to stick to the original transaction price whenever possible. IFRS, specifically IAS 16, focuses on current economic value. It wants the balance sheet to reflect what the asset is worth today, not what you paid for it 20 years ago. Keep this philosophy in mind because it explains every rule we are about to discuss. The biggest visible difference is revaluation. Under IFRS, you have a policy choice. If you own land that has tripled in value, you can choose the revaluation model and write that asset up to fair value, booking the gain to equity. Under US GAAP, this is strictly prohibited. You are stuck at the cost model. Even if that land is worth billions more than you paid, the balance sheet must show the historical cost. This creates a large amount of hidden value in many US corporations compared to their international peers. Now let's look at impairment. This is a favorite topic for exam writers. IFRS uses a one-step model. It simply asks, is the book value higher than the asset's real worth? If yes, you write it down immediately. US GAAP uses a unique two-step model to filter out temporary dips. Step 1 is the recoverability test. We compare the book value to the undiscounted future cash flows. If the raw cash coming in eventually covers the cost, we stop. We record zero impairment, even if the fair value is lower. Only if it fails that first test do we move to step 2, where we calculate the loss based on fair value. What happens if the economy recovers and the asset value bounces back? IFRS says, great, let's reflect that reality. You are permitted to reverse the impairment loss, bringing the asset value back up. US GAAP says, absolutely not. Once you write an asset down, that lower number becomes the new historical cost basis. You generally never reverse an impairment loss on assets held for use. Again, GAAP prioritizes conservatism. What about a building you own just to earn rent? Under IFRS, we have IAS 40. You can mark that building to market value every single year, and any gain goes straight to your net income. Under US GAAP, for most general companies, there is no separate standard. That rental building is treated just like a factory under ASC 360. You must keep it at cost and depreciate it. The only major exception is for investment companies like REITs or private equity funds under ASC 946. They do use fair value. But for a regular manufacturing company, it is the cost model, all the way. Operationally, there are two quick points. First, interest capitalization during construction is mandatory under both standards. Second, componentization, splitting an asset into parts like an engine versus a body. This is strictly mandatory under IFRS. Under US GAAP, it is permitted, but less strictly enforced. Many US companies use composite depreciation rates rather than detailed component tracking. Finally, for asset retirement obligations or cleanup costs, IFRS remeasures the liability every period using the current interest rate. The whole liability changes. US GAAP uses a layering approach. The old liability keeps the old interest rate. Only new liabilities get the new rate. It is more complex to track, but it avoids volatility from interest rate shifts. Here is your summary for exam day. If you only remember two things, remember that US GAAP prohibits revaluation and uses a two-step impairment test. Those are the most common testing points. This was a lot of technical detail. To help you study, I have prepared a comprehensive PDF guidebook comparing US GAAP and IFRS side by side. I am providing this document at no cost to my viewers. Please email me at the address on the screen to request your copy. And if you need personalized tutoring to pass your CPA exams, feel free to book a session via the link below. Thank you for watching and good luck with your studies.